Hi guys, welcome back to my channel. I'm Deepa and today I'm here to explain you about the topic called economic analysis. The things that we are discussing in this video is about the introduction of economic analysis and the characteristics of capital investment that comes under economic analysis and the capital investment cost categories and the conclusion part of this topic. So in this introduction part, we'll be saying about the definition of capital investment and the main difference between the expenses and the capital investment and important of capital investment decision making and tax implications of capital investment. So let's see what is the definition of capital investment. Capital investment refers to the money a company spends on a asset or a project that are expected to generate benefits over an extended period. These investments are strategic and intended to enhance the company's long-term capabilities and profitability. And the example that we can show is a new machinery or a building facilities or developing a new products and so on. And next we'll be having difference between the expenses and capital investment. So here the main difference is the expenses or a cost incurred in the day-to-day operation of a business, such as salaries, rent, or utility bills, and they are routine and necessary for keeping the business running. And this capital investment, on other hand, involves significant upfront expenditures on assets that provide value over time. They are not regular operational costs, but rather a long-term investment that can boost a company's growth and competitiveness. And the importance of capital investment decision making that includes the capital investment decisions are very critical and very crucial because they shape a company's future. Making the right choice can lead to a growth and profitability, while a poor decision can lead to a financial difficulties. And these decisions are often made at higher levels of management due to their long-term impact. They require careful analysis and considerations of factors like return of investment, that is ROI, and risk assessment and alignment with the company's strategic goals and so on. And then tax implications of capital investments. A capital investment can have a tax consequences. Tax laws often allows a company to deprecate the value of their capital assets over time, which can reduce the taxable income. This depreciation expense can be used to offset the initial cost of the investment. Additionally, tax incentives and deductions may be available for certain types of capital investment, and this depreciation expense can be used to offset the initial cost of the investment. And additionally, tax incentives and dedications may be available for certain types of capital investment, encouraging the businesses to invest in a specific areas like renewable energy and research and development and so on. So in this capital investment involve spending money on long-term assets or a project that can be benefit a company over time. They differ from day-to-day expenses and require careful decision making due to their significant impact on the company's future. And the tax implication play a role, and understanding the tax laws can help a companies maximize the benefits of their capital investment. Characteristics of capital investment includes relatively large initial cost and long-term benefits and future cash flows, and introduction of time value of money concept and irreversibility of capital investment. So what does this mean? Relatively large initial cost and capital investment typically require a substantial amount of money upfront. This initial cost can vary widely from hundreds of dollars for smaller businesses to millions or even billions for larger corporations. It might involve purchasing assets, constructing facilities, or developing the new technologies. And the long-term benefits and future cash flow that includes the benefits such as revenues and cost savings and stemming from capital investment don't happen immediately. They unfold over an extended period, often spanning several years. These future cash flows are what make capital investment valuable to the business. And then introduction of a time value of money and concept. And because of capital investment involve receiving benefits over a time, it is essential to consider the time value of money. This means recognizing that a dollar received in the future is not as valuable as a dollar received today. So to properly evaluate investment, businesses use financial concepts like discounting future cash flows to their present values and so on. Then irreversibility of capital investment. This includes the capital investment or relatively hard to reverse or change once implemented. If a business invests in a new factory, for an instance, it can be expensive and disruptive to alter or abandon that decision later. This is in contrast to routine expenses, which can often be adjusted more easily. So, the overall thing is a capital investment involve a substantial upfront cost and a general benefit over a time and require considering the time value for the money and are challenging to reverse once implemented. These characteristics make them significant decisions for business, often requiring careful analysis and planning. Here comes a capital investment of cost categories, and this includes the initial cost and annual expenses and revenues, and a periodic replacement and maintenance, and a salvage value. And this initial cost includes this is the money you spend at the beginning to get the investment up and running. It covers things like buying equipment and getting it set up. And the next comes annual expenses and revenues. This includes the cost and benefits that happen every year throughout the life of the investment. For example, maintenance cost and the income generated. The next, periodic replacement and maintenance, and this includes the similar to annual expenses only, but they don't happen every year. Think of it occasional upkeep or replacements. And then next comes a salvage value. This is the money you get from selling or disposing of investment at the end of its useful. And this overall includes the capital investments or big long-term decisions with the cost and benefits that stretch into the future. And they're not easy to change once made. This the costs are divided into initial, annual, periodic, and the money you get back, and when you're done with the investment. And here comes the conclusion part of this topic, and this includes the summing up the importance of capital investment analysis and uh, recap of the characteristics and cost categories of capital investment and emphasis on the need for careful evaluation and decision making, closing remarks on the long term impact of capital investment, and this all includes a very crucial part in this topic. And this importance of capital investment analysis include the capital investment analysis is crucial for business as it shapes their future growth, as we discussed, and making well informed decisions about where to invest and resources is essential for long term success. And characteristics and cost categories, as we discussed, again capital investment involve the significant upfront cost, offer long-term benefits, and so on. And the cost categories includes the initial, annual, periodic, and the salvage value, as we discussed. Then emphasis on careful evaluation and decision making. As we all know, the decision making plays a very crucial part in this economic analysis, as taking a proper decision um, may give the profit and many upfronts to the company on taking the decisions which is not irrelevant, then that leads to a loss and other changes. And closing remarks on long-term impact, it is crucial to remember that the effects of capital investment extend far into the future. Making wise choices can lead to growth and success, while poor decision can have lasting consequences. As we discussed, same like a decision making and planning and analysis are essential for well-being of a company. And this is about this topic. And thank you so much for watching.